Hello, it's already Tuesday, a little bit late video this week, but still we have some time before major events to discuss them. So this time maybe I will not talk about the whole calendar, but I will discuss the most important events in chronicle order and potential scenarios that can be played out on the charts. So the first thing is today's information from the EU that they agreed to ban 90% of oil imports from Russia till the year's end, which most likely will cause inflation to rise further in Europe. 1/3 of the oil was imported via pipeline, which is a cheaper solution, so this will mean that they will have to substitute it with a more expensive option for sure. There are two risks from this. So one is that if the oil producers will not pump much more oil, and if the International Energy Agency will not release more reserves to the market like they did in the beginning of the conflict in Ukraine, the price on international markets will rise significantly. So we will have to wait until Thursday to know what OPEC countries will do with their monthly output increase. We saw recently that they are not keen to help the US allies on this. So every country has their own reasons, but the most common is, of course, money. So naturally, they earn tons of cash in this situation, so they will try to keep it going for as long as possible. So to summarize the current situation, I would not expect to see lower oil prices, but right now you can see that for no reason the Brent oil is falling sharply, while WTI is still keeping the current level. As for Brent, I would wait until we break out of the support on $118 before searching for any short position to enter. Next thing is a CPI reading from the Eurozone, which we got a minute ago, and it rose significantly up to 8.4%. This is a major threat for EU economies. If this goes out of control, it can cause a recession for European countries, especially Germany, which is heavily reliant on cheap gas and oil from Russia. That is why they are trying to oppose any of the sanctions and bans, because this will make them less competitive on global markets. So now we need to watch closely for PMI indexes from Germany and see what are the numbers to say if the recession is coming or not. If they are above 50, everything is okay. If they are below 50, like in China, there is a great risk of a bear market. So now German DAX is not a good gauge for economic overview, but because it consists of too few companies, but you can try to speculate on it. As you can see right now, we broke out of this downward moving channel to the upside, and we are at the 15,500 resistance level. If the numbers from data publications keep worsening, like the manufacturing PMIs tomorrow, it might be a good opportunity to go short on DAX. So now let's go to the most important data from the US. So we have a beige book, manufacturing and non-manufacturing PMIs this week, and of course NFPs on Friday. So those will be another crucial data for the Fed to either soften a little bit the recently very hawkish rate policy, or on the contrary, to give more faith in the economy that is in very good condition. So in last week, minutes from the Fed meeting, we received info that they might not want to continue the series of rate hikes so strongly, since there are some signals that the inflation might weaken a bit. So most important data will come next week, i.e. the inflation data, but the NFP will give some overview how strong the labor market is. So if the NFP reading will be worse, it might be a double negative for the dollar, since it will be a sign that the policy might soften and then next rate hike will come a bit later this year. So if we check Euro USD chart, we can see that we didn't broke the resistance on 1.0773. It would mean that most likely we will make a correction now. So I would look for a short now and exit at 1.0642. We have a wedge pattern here, which most likely will mean that there is a good chance for this move. If we go north, on the other hand, then I would wait for a retest of this previous important level on 1.0773 and then go long. But for now, short is most likely a better option. So okay, thanks for now for watching, and I'll see you the next time. Bye.